Good evening, members. It's a wonderful Sunday evening, and we are getting started. I welcome you to our session today. As we discuss the topic, is insurance, is life insurance worth it? It's going to be an interesting discussion today. I have been in interaction with many people, and they think that insurance is not worth it. They think that maybe there are better alternatives to insurance. Many people think that insurance companies are cheats, and many people think that they would rather do other ventures other than insurance. I've also been with other members who have benefited from insurance, and they praise it. They think that insurance is a great innovation. Insurance is a great protection tool, and therefore that they would encourage each and every one of us to have an insurance policy with them. So it is upon that background that I thought maybe we could have such a session to bring these differing views together and we digest them. To help us on this topic is going to be Joseph Tumwijuche, and Daisy Cannon. Both of these people have worked in the insurance industry, and I do believe that they have quite an experience and they can help us. In this session, we are going to be encouraged to ask as many questions as we can, because it is through these questions that we get to learn. So as we get started, I would like to remind you that these are our weekly financial literacy series that we have. They happen every Sunday at 5 p.m. If you've missed any of our previous sessions, I would encourage you to go to my YouTube channel, and that is Personal Finance Mastery with Darius. Check out the previous sessions. Please feel free to subscribe onto the platform so that you can be able to receive even future sessions. So as we start today's session, I would like to ask you to engage as much as you can, to ask as much questions as you can, to give your comments, to give your experiences. To ensure that we are well behaved, the chat room is going to be open, but none of us is going to be allowed to unmute except for our speakers. So please feel free to put your comments and questions in the chat room, and later the speakers will respond to them. So right about now, I would like to give the platform to Daisy as she takes us through what life insurance is. And by the end of this session, we should be able to determine whether it is indeed worth it or not. I welcome you once again, Joseph and Daisy. I'm very optimistic that your session or your presentation is going to be beneficial, and maybe people are going to move away with a different mindset about insurance. Maybe I'll give an opportunity to Daisy to first say hi to us, then Joseph will also say hi to us, and then Daisy will start, and then Joseph will come in, and then we'll get into a Q&A session. Daisy, could you say hi to us?
Thank you so much, Darius, for this opportunity to be sharing this evening. My name is Daisy Cannon, and previously Daisy Mabonga, but as you get older, you transition, so that's why the Cannon name is there. So I'm grateful for this opportunity this evening, and I am a wife, I am a counselor, I am also a coach, a life coach, and currently what we are going to share this evening is I am a risk and financial advisor. So I'm very optimistic, very excited to be sharing with you this evening about life insurance. Thank you so much. Over to you.
Thank you, Daisy. Joseph?
Thank you very much, Darius. Good evening, everyone. I'm Joseph Tumwijuche. I'm a businessman, and for the last 5 years, I've been working with the insurance sector. Thank you very much, Darius.
Wonderful. Thank you, Joseph. So right now, I'd like to give the mic to Daisy, who would utilize about 15 to 20 minutes before we can turn to Joseph and then a Q&A session. Daisy, over to you.
Thank you, Darius, once again. Yes, let's straight away roll into our discussion this evening. And members were asking, is life insurance worth it? And with the background of insurance spanning from quite now a number of years, and having also had a background in banking, it is something worth it, but we will leave it to an open discussion later. And to start with, I would like us to refer to our definition of personal finance management. Our definition of personal finance management has components of where an individual or a family performs to budget, saves, spends money on resources over time, but also there is a component whereby this individual must take into account of various risks and future life events. So with this background of personal finance management, this is where we should put our tool tonight, whereby we have to take into consideration financial risks and future life events. So with that background, I would love to share why we think life insurance is worthwhile. Now, this is not a new thing. The background of life insurance spans way back in 14th century, let's say, whereby people used to do this, but they were not documented. They would come together, support one another. And the first, this happened in Geneva, whereby people would support themselves, take out policies without documentation. But the first of its kind was issued in 1347. So with this background, it went on development whereby in the US, they picked it up, and we will not go much into the history, but what I'm trying to share with you is that it's not a new component. It's something that people have done it over time and proven that it works. So borrowing a leaf from there, even to our own Ugandan setting here, our parents have done it before. Even our grandparents have done this before. You remember, most of us when we were growing up those days, we had our parents go to burial groups, Vachala Twegate. Those are some of the insurance components that perfectly come out to show you that in life, there are risks and you have to take care of them. Now, I will narrow down to our conversation this evening. Is life worth it? And before we go into the in-depth, let's first explore what is life insurance anyway. Life insurance is whereby an insurance takes an insurer or an assurer, whereby the insurer promises to pay an amount of money to that who is insured or assured in case of a risk like death or a disability, we would say in this case. But this also should be noted that we have different types of life insurance. So most of us only stop at the most common now, where I hear people say Somesa plan, they stop at Pro EduSave, but they do not know that these actually fall into categories. Now with the detailed information about all these policies, they are categorized. We have what we call protection policies, which are basically called whole life. And those policies by nature, they're meant for strictly protection. They take the risk into account, and their purpose is to protect the insurer or assurer. And by you taking out that policy, you are assured that in case of a risk, you're covered. But also we should note that this is just not something that one starts and there is no attachment to it, the policyholder must pay a premium, a contribution every month or quarterly, depending on how they are comfortable with their incomes coming in. Sometimes others pay a lump sum. Sometimes they pay regularly, depending on what the client is comfortable with. So in this case, the insurer develops a contract. So the life insurance, there must be a contract, legally binding contract, whereby you as an assured or the insurer have an understanding that when you make contributions every month or a lump sum of it, you're expecting A, B, C, D from your insurance. So in the event, they also speculate out, what is this, what are these benefits and how do you benefit from them? What do they cover and what do they not cover? For example, here, your policy, that legal document will show you what you're entitled to, but also it will show you what you do not expect your insurance to cover in case. Now for life insurance, some of the related issues that they do not cover, there is war. There is, for example, if we went into war like Uganda, the whole country, there is war, it's not expected to be covered. For example, if someone took out a policy and then tomorrow thinking they have sorted their family, they go and hang themselves or commit suicide because they know even if they passed on, the company will pay lump sums of money to their beneficiaries. The company will not pay that. So there are exclusions, what we call exclusions. So these from the start are open. So you know what you're expecting from your insurer and what they also expect from you. Now, for still whole life policies, in most cases, they are taken out for a lifetime, a longer period of time, up to maybe somebody dies. And these are majorly common in India and in some countries that have been really done this for so long. So someone takes out a policy for over a period of time. Yes, can you hear me?
Are you able to increase your volume?
Yeah, I can. So.
All right, thank you.
Okay. Can you hear me now? Is that loud enough, loud and clear?
Yeah, we can hear you, but if you can increase the volume, it will be a little bit better. Thank you.
Okay. All right, thank you. So back to where our discussion was. So I was explaining that the life insurance policies are broken down into protection policies, but also, okay, thank you, but also into endowment policies. Now, also we should note that these protection policies usually pay out a lump sum at once. However, when it comes to endowment policies, that's now the second category. Now, these are basically policies that people take out with a saving. You connect with a saving over time, but the purpose of this is to help you grow your finances slowly by slowly, but they also come with benefits. And these benefits, like I said, that financial risks and future events. We may not be able to predict the future events. We may not be able to predict the financial risks, but these endowment policies help us to grow money over a period of time, but also to be able to address the risks that may come in the future. Darius, let's move on to the next slide. So basically, these have a term. The endowment policies have a specific term limit. So most of our policies, those who have the life insurance policies, have picked out from the endowment policies. That's where we've now found we now find the EduSave, we find the SOMESA, the Kwanjula product of Jubilee, and many others, because there is a dream attached to it, which must be achieved in a specific time. But in conclusion, what we should know and take home is you only become a policy holder after the insurer accepts to take the risk. And when the insurer accepts your risk, that's when you can now pay your premiums. It's not automatic that when you apply for a policy, you're given. No, we have what we call the underwriters, the assessment team. They assess your condition. They assess if you are eligible to this policy. And therefore, if you qualify, you are given the policy. And also, it should be noted that after being given a policy, then you can pay your premiums. However, some companies do it their way. They take on the risk, immediately you pay money. So it depends on different companies, how they handle their things. But in short, just be rest assured that you cannot own a policy without a commitment when you have not contributed. And also we have what we call lapse. Now, lapse is a period where you have taken loan without payment after 6 months. Now, it should be noted that the insurance industry has a regulator. Now, some of the things that we do, we are regulated by that regulator. Previously, insurance companies had grace periods of 3 months, and there you'd go in lapse. But the regulator changed it to 6 months and above. So we have a regulator who helps us follow into with what we are supposed to do. Let's move on, Darius. So it should not taken that the insurance companies work independently. No, we do not work independently. These are some of the reasons. That's why we think insurance is important, and it's a must-have for anybody who is looking at two things. There are two things that we are going to address tonight, and one of them is insurance viable? Is it an option? Depending on how you view it, because we have two things. We are looking for other streams of income, but we are also looking at how do we protect whatever we have achieved in a mean time. So I'm going to share, first of all, I'm just taking you through this, but when we finish this, we will share how can you use insurance to generate you money. So some of these, I've just bullet them out, will not waste a lot of time, but I'll just maybe just explain a little bit. One of them is sudden illness and disease. Yes, most of us are into personal business. We're venturing into personal business, but you realize that most of this business, people buy into you as an individual, you as Darius. Sometimes there are businesses that are so personal that without you, even it's very hard for people you leave behind to make a sale. So on that fateful day, if you're sick, that means you can't go out to run the business. What happens to you? So sometimes health challenges strike us, like cancers, stroke. You didn't see this coming, but somehow it has come and it's disorganizing you, but you are the head of your business. Second point, we do insurance not just because it is a must, but we are also looking at preserving our life's achievements. You wouldn't love to lose everything in a go just because you did not plan well. You did not have a backup. You did not have that emergency fund. Insurance actually is also an emergency fund somewhere, somehow. It could sort you out. Lots of key employees. Now this one, the employers use it so much. Why? Because they understand the impact. If, for example, you lost 5 employers in a day, How are you going to give each family money? So they do it to protect themselves as employers, so that when they have got that loss, they have money coming in that helps pay off the deceased family as a token of thank you and a send-off, but also that will help them recruit the next person to fill your gap. Let's go on, Darius. Guaranteed growth of your money every year. Now, insurance, like I said, for policies that have the endowment in nature, that have the endowment component in nature, every year you're assured of interest, let's say bonuses, because in the language of insurance, we don't call it interest. The reason is simple, it's not taxed. So this money comes in every year after the companies have declared their bonuses, how much they have made in that year, and therefore you share this interest, this bonus, depending on how much they have made out there in the whole year. So in short, insurance acts for you as a way, like you would be like you are a policy holder, you are a shareholder. So you share these bonuses which help you raise your finances, which is different, a little different from the bank. I worked with the bank for over 5 years, but when the bank would give out interest, the only people who would benefit more are those who would have a lot of money, and a lot of money, I'm meaning 1 billion shillings on their account and more. That's when you say, oh, this is good money that has come in. But anybody maybe less than 1 million shillings on account, or 10 million shillings, you would hardly notice that interest. Why? The interest would come, but then the tax would be applied. And at the end of the day, actually what was amazing is people would just come and tell you, I see money going off my account. What is happening? Then you're like, let me check what's going on. And you just discover that the money is leaving her account because it is a tax that has to be taken off. So in insurance, basically, you help grow your money by earning dividends, which are bonuses. So at the end of the year, you are assured. And the way they do the way that the bonuses are given is depending. Different companies, like I said, do their things differently. So it is you to go and search which company gives the best interest or bonus, and how is their bonus applied onto what you're to receive at the end. How do they calculate it? Because every company has different way they calculate their bonuses. Darius, let's go, let's move. Yes, sometimes people ask, why can't we just borrow money out there and do business? Borrowing is good, but borrowing it also has disadvantages in itself. But look at it. If you grow your money patiently, and by the way, the insurance policy with some banks can act as collateral. Some banks, once they realize that you have an insurance policy that's about to mature, they can actually give you a loan against it. But also in most cases now, for people who go abroad to travel for education and so on, most times the schools or the companies are asking, do you have a life insurance policy to be granted opportunity to study? So it is not just something that we take, we just have to take out, but there are other places that you may be required to show your life insurance policy as part of the requirements. So let's move. The rest of the things we are not going to talk much because you can read it. You will just read and gain understanding there. I wanted to, let's move fast a little bit because our time is fast spent. Yes, now life insurance can act to protect your loved ones. That's the most important component of life insurance as well. For those who have their loved ones, children, people you take care of. Remember, as a breadwinner, you have so many responsibilities, and amongst them are the people you're taking care of. So even when you are having businesses, there's no business that can be that can assure you that even if you have challenges with your health, you have your long way gone, they will take care of your people. Now, life insurance helps you as an individual to help plan for your children, to protect their futures. We've seen many times that people we think have been rich, after they have gone, their businesses have collapsed, people have fought for this and the other, and then they lose it all, and their children drop out of school. But we have had policies whereby if you have insured your children against, even if you passed on, the documents read your children's names. The documents have their beneficiaries and their percentages that the policy allocates them. So even if you are gone, somebody asks, even that money can be eaten by next of kin. That money is not given to the next of kin, and that money is given to the beneficiaries. So there is no way you will worry that even when I've died, my money will be eaten by outside people. No, the money goes to the beneficiaries. Let's move on. Darius? Yeah. Darius? Yeah, so basically there is protection, there is security. Now, life insurance, one of the most important thing it also does is it pays off the debt. Many people have gotten into debt, getting loans, quick deals, and they end up broke. But if you have a life insurance policy, this can be taken out against your mortgage. Instead of the bank taking that mortgage from you and leaving your family out, the life insurance plan can pay off the mortgage debt, and your family is restored in case of anything. Then it also offers you a peace of mind. I don't think if you have been a successful person, you would love to see any of your dependents not happy. I think the most reason why we all go out to look to work is to see the people we take care of happy and ourselves happy. So once you have this policy, it helps you, it guides you, it gives you a direction in life. But this, once you know the next course of action, you will be able to have a peace of mind. When you know that you have planned for your children, you have planned for your next house, you have planned for your next car, you have planned for your next travel, you have planned for your next business, you will have a peace of mind because your life will be planned for, arranged. So you will not be like one who is working into conflict. You want this, you want the other, you don't know how to get it. You will have laid out a plan. So that is one of the benefits as well, to have a peace of mind. You get your life in order, financially in order, with the events that may come in the future. Yes, move on. In conclusion, I would love us to note that life insurance is one of those avenues that can grow, that we can use to grow our incomes annually, but also take into consideration that should anything in the future happen, you are covered. you are covered because you have a payout, instant payout, and then a continuation of saving for you. I felt like also sharing with you about different insurances that we have. Now, most of us, when the discussion was running on the group chat, I realized that we are conversant with general, everything was around general, and we're not picking or understanding why we think life insurance, there's actually a mix. Now, we should know that life insurance, I mean, in general, insurance is a big component. We have life insurance. So what we've just discussed in a nutshell is life insurance. We have bank assurance. Now, bank assurance is basically the banks have taken on the product which is insurance, and the banks are selling it. Most of you haven't gone to the bank and the bankers have sold you to this product. Now, how it works, it also works in a different way. The only issue is that we share products, the products that we share. For example, there's credit life. There are so other products under that arm of insurance. There are education policies as well, because there is a need, a growing need. So bank assurance is one of the insurance policy, insurance products. We also have general insurance. That one is very common, and I will not go there because most of us on this group understand that. We have medical insurance the same way, but these two, general and medical insurance, is usually, most of us actually access it from our employers. They access it from, we access it from our employers. Basically, the reason why the employers do it is because they understand where they are benefiting from. Everything here has a benefit as well as a negative. Then we have group life. Group life is also done majorly by companies, whereby a company takes out a group life policy against its staff in case a staff died, what I explained earlier before. But this is also a product. So it's not only general insurance, like as I saw the members on the group chat discuss. Insurance is wide, very wide, and it's not new. It's an old thing that has been tested over time. And trust me, if we are saying that it is not beneficial, then it wouldn't have lasted this much. And just to go back, and like I said, that with that definition of personal finance management, we should take in account future financial risks and future events, so that we are whole, we are not haphazard baked. Yes. Now, the other issue I wanted us to discuss as I summarize is someone asked, we've been trying to find a reason how life insurance can be used to generate income. It is simple. Life insurance, you can use it as a stream to generate income. What I've just explained here is not what applies there. Now, what applies here is you can use this insurance as another stream of income. How? If you take out yourself and take time to learn about it, apply and become an agent of any of the companies, you are paid, first of all, commission as an agent. But also for some other companies, once you become an agent and you are good, they will take you on to help others, mentor others, develop others, train others, become as good as you. So once you do that, it has actually immense benefits. First of all, as an agent, you're not limited to sell your own business. You sell your own and earn commission. That's direct commission to you. Secondly, you will also be able to earn multiple sources of income we are talking about. You'll be able to earn a percentage on each of the team members, the agents you lead. Now, in this way, you're creating multiple sources of income for you. Unlike a traditional job, if you have worked in the bank, you know how bank money comes in salary. You don't expect trickles of money coming in the course of, why? Because you're spending all your hours there and you're not, if you don't have a side hustle, then you'll not have that. But with life insurance, you're not limited to doing the job. You can do it as an agent. First of all, you earn your commission, but develop others where you also earn a percentage on each one's business when it trickles in. So in that way, you have 2 or more sources of income coming into your account. So for those who were saying, is it worthwhile? It is worthwhile, depends on how you look at it. You can be an agent and earn money. You can choose out to help others, train them, and they be as good as you are, and you are paid for it. But also, you can use, if you don't want to choose that way of growing your money with multiple sources of income coming in, you can be a client. But either way, I would love to conclude insurance is worthwhile, depending on how you look at it. Thank you, Darius. And we'll move, I think, to our questions, if there are any. Definitely, they should be there. If there are any questions.
Thank you, Daisy. This is wonderful. So right about now, before we move into the questions, I'll give an opportunity to Joseph to share with us any insights that you may have beyond what you've shared, and after that we shall have the questions. For those who have questions, I can put them into the chat room and we'll pick them. Joseph, over to you.
Thank you very much, Darius. Thank you, Daisy, for that elaborate explanation of insurance. Daisy has pretty much dissected insurance, but I just want to, just in a minute or two, throw in this perspective that given the benefits of insurance and the topic that we were given, that life insurance, is it really worth consideration? Really worth considering, given many options available for financial security. And so I'd like to draw someone to the aspect of financial security in that particular phrase that was given, and also the fact that we have many options. As Daisy has said, whether it is medical or what we call life insurance, whether it is general insurance, one of the main objectives, first and foremost, is that every class of insurance, every product of insurance, whether it is term or not term or whole life or endowment, some of the risks that are stated in there, the main purpose is that when you're exposed to those risks, and that those risks have potential to hamper your capacity to pursue your financial objectives or your life goals. For example, in case of medical, the main purpose would be that when you fall sick, you go to a hospital, you get treatment under your insurance cover, and so your health is restored by getting treatment. If it is for general, say car insurance, marine insurance, professional liability, or name it, the essence is that person who steps out to take out that insurance policy has foreseen that there are potential risks ahead, and the occurrence of those risks is bound to deter them or to bring them backwards in their journey of progress. And so what insurance is that when that risk occurs, you transfer it to the insurer for whatever case of policy you have. And so for you, the person who is insured, you're taken back to the position you were before the risk has occurred, or you're made better. And so in all these other options that we have, that becomes one of the key differentiator of insurance. And it is very important to note that in our strides to get ahead in financial freedom and all that, there is no one particular deal maker in most cases. And this is a mistake that we all mostly do, that we want to be told that when you invest in insurance, all your issues are sorted. Or when you invest in real estate, you're sorted. Darius will maybe add more as a personal financial advisor here, that it has to be a combination. And so for us, from the perspective of insurance, is that in your combination of all other various options available, please, can you have insurance and also benefit from these, the benefits that insurance comes in? Only then will you be able to have a portfolio that is diversified and can successfully deliver you a position of financial freedom. So, key point is that insurance, the main purpose is to take you back to your place where you were before the risk has occurred, or make you better. But it is complementary, just as any other options cannot stand alone. Insurance as well, it should be highlighted, that should be considered in every other options that you have as an investor or an entrepreneur or someone trying to save. And so that's one thing I wanted to highlight, and then maybe we can leave enough time for questions and answers. Thank you very much, Darius.
All right, thank you very much, Joseph and Daisy, of course, for giving us those insights about life insurance. I'm very much hopeful that each and everyone that is on the call is picking up insights. I used to be one of those who used to despise insurance, and I used to think that insurance companies are cheats. But definitely, as I've grown my knowledge on financial literacy, as I've come to understand what it takes to get financial independence, I realized that you cannot take away the kinds of benefits like a peace of mind that insurance gives you. There is definitely a lot that insurance brings on board. So I have some few questions already with me that people have posted in the chat. Some people have directly inboxed me, and I'll pass them on to, I'll start with Joseph. I have some of these questions for you. So Joseph, someone was asking, what is the main objective of insurance companies? Are they started to help clients with their problems, or their main objective is to make money for themselves and their stakeholders, and in the process, help their clients? And the next question is, if you don't mind, I'll give them to you at once, and then you can respond. The next question is, how and where do they invest money they get from customers to generate high interest profits that they use to pay out claims? The person also asks, why do they have long contracts with many clauses written in legalese and insurance technical language that sounds like Greek or Chinese to the majority of the customers? And lastly, Are the detailed and many terms and conditions they present in the contracts negotiable and some changeable depending on the views and concerns of the customer? Or you have to take them as given and only sign on the dotted line? Joseph, if you can start from there and we move on.
Okay, thank you very much, Darius. I must reiterate that these are very, 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 very good questions. Let me start with the very first one. The main objective of insurance companies is to address a need. Now, I'm privileged to be talking to people that come from a background of either business curiosity or a group of people that have are inclined to understanding the business environment. Everything that takes place on planet Earth, including your personal life, is a transaction. It is a form of a business. And so in so doing, it has a purpose. Otherwise, people in financial literacy would not push us to have purposes in our lives. And so insurance cannot be divorced from that. First and foremost, it is a business, like banks are, like development banks are, like NGOs are, like, it is a business. And so in its doing business, it has specific objectives and needs of the public, of the intended customers that it's out to serve. It's very important that we understand that. So that explains that in their formation, definitely they have to take a certain form. Okay, and so when we appreciate that, we have to appreciate that, yes, they are businesses like any other. They have objectives, and those objectives are what we need as a people to align ourselves with. One of the main objectives, like I've stated, is that to address, to take on a risk from either a business or from a person. So these insurance companies take on those risks from you, and like Daisy said, it comes at a cost. Now, it goes back to what type of insurance you're taking on. And Daisy has really done good justice to the types of insurances. But let's confine ourselves to life insurance. In life insurance, we are saying that you do not have a spare part of a life. There isn't. But as a person, and from an economics perspective, we need to appreciate that as a human, every human being is an economy. You have, inflow and cash flow. So as a person, you have objectives that you're here for. Okay, so we address those needs, specific needs in life. So be it products like education plans, purely endowment plans, we are trying to address a certain need in your life. So when the first question says that are they started to help clients with their problems, or their main objective is to make money for themselves and their stakeholders, and in the process also help customers. Definitely there is no one who starts a business not to do business. So that component is there. And that's why when you look at, for example, most life policies, we talk about a bonus at the end of every year. In the other language, you would call it an interest. Definitely you cannot, when you bring in those aspects of bonuses and interests, we are in business. And of course, we invest, we make money, make profits, and on those profits, we share with you what we call a bonus. But the gist of it is that, just as all you know, that what keeps a business distinct is if you're able to address a need in a community. And so insurance from time immemorial focuses on a given need. And this particular case, life insurance, looks at you as a human being, being able to enable you attain your dreams, continue and not fall off the journey of attaining your dreams. So, and in the process of that, obviously, we help our customers. The second question is, how and where do they invest the money they get from customers to generate high interest or profits they use to pay out claims? Like Daisy said earlier, insurance is also, on my opinion, and that's why we're having this discussion here, is part and parcel of financial services. It's part and parcel of the financial subsector. And so we have a regulator that gives us specific guidelines on how to invest that money. True, we collect large sums of money as insurance houses. And so we are regulated on where and how to invest, and also depending on what insurances we are having. For example, we also deal in the pool of the financial options that are available. Talk about bonds, talk about government papers, lending, basically the financial markets and such portfolios. Why? Because it is such portfolios that are able to be calculated and also easily liquidated. If, for example, life insurances were investing in real estate, then we would have a problem when a catastrophe falls in Kampala and we will have half of our clients maybe coming to claim, because then we will not easily liquidate, solid assets like real estate. For those of you that follow the discussion around NSSF, there are such things like it's hard to get our money easily because it's invested out of the country. It's invested in in assets, in hard assets, and all that. So, specific portfolios are selected to enable us make money, make a profit, and be able to give our clients a bonus. But also it's important to note that the regulator, I will not speak for the regulator here, but it's very important to note that the regulator is specific on what portfolio you are investing in, how you're investing in, through various audits to ensure that the money is well invested and it is making money to be able to give our clients a bonus. And for that reason, most, at least all that I know, at least have a bonus every year. So if you have a life insurance or you take out a life insurance, a year passes, please talk to your agent, find out what your bonus is. Why do they have long contracts with many clauses written in legalese and insurance technical language that sounds like Greek or Chinese to the majority of the customers? Now, this is an issue that cuts across. First and foremost, it's important for us to know that an insurance, you walk into Joseph, you walk up to, you agree that I take on a risk in a given framework. And so for me to be able to come good on my promise, something that binds me to, and announce that I've closed insurance contract is a legal contract. That's why your insurance contract. The question here might be, why is it in legalese? Because we're in a legal environment. However, it is incumbent on your insurer, on your agent, and on you, one, to explain to you in simple terms, to explain to you, simplify those terms for you, then you're able to seek further clarification until you're satisfied. Now, the reason why this is legalese, which I, yes, partly agree, but I think what probably this person might have meant is that we have also what we call an insurance jargon, an insurance language. Normally, these policies are simplified in English, but they bear an insurance language. Just like you walk into a bank and
Hi, Joseph.
and all that,
Hi, Joseph.
you know. And cutting, the factor that cuts across is that you, yes,
Yes,
can you hear me?
we're struggling a bit here from you because of your internet. Maybe I can
Sorry.
pass on the next question to Daisy as you get set with your
Internet.
with your internet from wherever you are.
Okay.
Yes. All right. So Daisy, you can pick up on the last question that that Joseph was responding to. Did you pick it up?
Yes, I did. So I'll pick it up from there. Basically, yes, like Joseph was saying, insurance is a service. And we all know from our background as business people now, that as long as you identify a need and solve it, definitely there must be something coming in. But when we look at it from this point, insurance has agents, it has staff, it finances your documents. There is a cost, an administrative cost. So I wouldn't think that any one of us would think it should be given free of charge. And then about the language used, yes, we all have gone to school, and in most cases, there is an accounting language, there is insurance language, there is a banking language, deposits and debits and all that. So when it comes to the clauses that are used, yes, those clauses are used so that you understand that it is specifically insurance and there is a specific way. Like I said, it's a legal contract. A legal contract, you must understand what is in it for you and what is in not for you. So all these clauses which are put openly, actually they're even openly out there for you to understand them before you commit yourself. So when you are out there and you have an agent before you, in most cases, you have the opportunity to ask, but more so, the agents also have the opportunity to explain to you what these clauses mean. Yes, sometimes the wordings may be so English that we may not understand, but have the courtesy, because you have to understand anything before you get into something. Yeah, just like what happens, to me, I think it's just our nature, either as Ugandans, that we do not want to read and ask questions, because I would often witness this in the bank. Someone comes and you give her all this document and she just says, where can I sign? Where can I sign? I think we are growing of age to know that now it's just not about signing a document, because you can sign yourself into prison, but it's now for us to understand everything that we are given. We should take caution to read and understand. And if we do not understand, thank God there is Google about a particular thing. Google it out before you commit yourself. Yes, so basically that is it. But it's a language, just like you would say the footballers have their language. It's also a language of insurance. I hope that is clear, Darius.
Yes. All right. Thank you, Daisy, for responding to those questions. Wonderful. And I have Becky in the chat room who is also responding to the rest of the questions as they are coming through. So I'll pick up some, and then I'll also pick some questions from our WhatsApp community and pass them on. But I have this question from Godfrey Bahati, and Bahati is asking, why are life insurance companies not willing to take on people with comorbidities like hypertension, diabetes, HIV, cancer, and so on?
Okay. Thank you so much. The reason why, like we have also understood that it is a risk business. They are taking off that risk from you. And one of the things that they do is they have an assessment team. We have doctors on board, we have lawyers on board who assess the situation. That's why in my presentation, I say, just because you think you have the money, you think you qualify for insurance, it's not the case. They have to assess your health situation. And it is also not true that they do not take, because we have clients. For one, I have clients who are diabetic, who have pressure, who are HIV positive. But what is required of you, you must declare it. As per one of the guidelines in insurance, there is a clause that we call we call it to the best interest of the customer. It's you, a customer whom I have just met. For example, you're a stranger, I've just bumped into you, maybe we've been just chatting for 2-3 days. I do not know your personal life. Now here, when I am with you, you tell me everything is okay. And yet there's a clause that expects you to be open to me as much as possible about the risks, your risk behaviors, about your health behaviors. When you give me such information, that's when now our underlying team assesses you. Now, after it has assessed you and found, okay, you are positive, HIV positive, you have cancer, or you may have an underlying disease, that is a big risk to your life. It's threatening your life. So they try to find out, why is it that now you have wanted life insurance? Because look at it, some of the things are done by the underwriting team to eliminate fraud, to eliminate fraud and things that could create situations where they are not able to compensate. A good example is someone knows very well that they have been battling cancer, and this cancer maybe was diagnosed 3 years ago, and they've been living their lives at by and large. They never thought about insurance, and now the doctor tells them, you know what, 6 months down the road, you're on your way, 6 feet. Now, this person in the last minute realizes, oh, I have money here, but how am I leaving my family? If I bought a policy, they will be safe. What is the underlying intention? The underlying intention there is to defraud, because maybe you've been hearing about it, but you didn't bother because you thought you have the life and so on. But now that you realize there's a problem, you want to rush and firefight. So the underlying team, it does not reject. However, this is what it does. It assesses your situation. They will call you up, discuss about the situation, explain to them. If you are also okay with giving them information to your doctors, they can contact your doctors, and the doctors will advise. It's upon the doctor's advice that they are able to give you or decline. For example, how long have you been with this disease? But some people have pressure here and they move and they're okay. Life goes on for years and years. It's not that because you have such diseases, you're going to be denied the policy. They assess your condition, and upon the doctor's advice, they either decline or give you. Now, in most cases, they even discuss this with you. They want to cover you, but because of A and B, C, D risks, they will cover you at an extra cost, unless if you decline. For example, if you have maybe had pressure for this long, and maybe in the latest stages, it's not seemingly treating you quite well. You're in and out of hospital. That means you're a high-risk patient. And remember, you're giving us your money to invest for you. We want you to be alive as well and enjoy this money when maturity comes. So what they will do is they will ask you, can you meet a particular fee to cover that extra risk? So it's not true that all cases are declined, and also not all cases are accepted, depending on their assessment and what they deem right. Because even though they're also a risk company, they're also able to assess how far can they take the risk on. Yes, basically, I hope that also answers.
All right, wonderful. Thank you, Daisy, for that response. This question is going to Joseph. So Joseph, if someone is saying they have a friend who took on a policy for 10 years, but along the way, it was around the 8th year, this person couldn't continue with paying their premiums, and they lost everything that they had saved with this insurance company. Isn't there a better alternative that could have happened, or is such a case even possible? Would you enlighten to us why such a circumstance would happen? I've saved with you for 8 years. I'm just failing on the 2 years, maybe because I've lost my job, I've lost my source of income. But here you are saying that all the 8 years that you've saved, potea. Over to you, Joseph.
Thank you very much. That is quite an interesting question, because it shouldn't be like that. Now, also it takes me back to what we need to understand is that normally when we are responding to insurance, we respond to insurance as a whole, But insurance is broken down to quite many products that address specific needs. So let me put this into perspective. Can you hear me, Darius?
Yes, I can hear you, Joseph.
Okay. If this was an endowment plan, 8 out of 10 years, you do not have to lose your money. Why? Because this plan already has what we call a sum assured. A surrender value. This plan has already attained what we call a surrender value. A surrender value is that value, or a policy attains a surrender value when it has exceeded, generally in this market, at 36 months, well paid. And the essence behind that surrender value is that beyond that threshold of 3 years, in case something happens to you, at least you're able to go back and request to exit the plan and still walk away with a payment, a payout. Of course, now different companies might have different conditions on how they do that. But what I have seen is that sometimes there is no thorough discussion and consultations done. For example, when your agent calls you, this is from experience, and says, Mark, your policy has not been paid for the last month, it's going to lapse, you're going to lose your money. And the client at that point and goes into oblivion, and the policy is left that way. Someone who has not done due diligence might let it be. But even then, when you come at on the 10th year, really your plan should have a surrender value, unless it was a certain policy. Because some policies are whole life in a sense that or rather even term, in a sense that they are not endowment, they are only taking on a risk per se. It's a risk, it's a protection. So in the 10 years, if a risk has not occurred, then there is no payout for you. But from what this person says, that they were supposed to have gotten a payout at the end of the 10 years, they failed to pay at 8th year, and then they were told potea. Now, this is a point whereby we have a regulator, IRA, that when you're a client and you are aggrieved, walk to the regulator. That is a third party. I'm sure there is an arbitration that can be done. I think there's a tribunal that is in place to look into such issues. And then the regulator will call insurer A. Let's use an example of Prudential. Say, Prudential, this client is claiming, what kind of policy do you have? What are the conditions and terms of this client's policy? What is best for you as the insurer, and what is best for the client? So the regulator will step in and will do mediation, and you will walk away with satisfied, you walk away with satisfactory answers. But what I need to demystify here is that there shouldn't be, or at least I don't expect, an insurance company that takes out a life plan and then outrightly makes you lose when you've paid 8 years of premiums into a 10-year policy. The question was saying, are there alternatives? Yes. Go back to that insurance company, sit down, let them, the duty is on them to revisit the terms and conditions and show you where you have failed and why you shouldn't. In the event that you're not satisfied, walk to the regulator, have a third party give you answers as pertaining to your policy. That said, as life insurers, our duty is to educate, to get in touch, to be in touch with the clients right from the beginning to the end. So that's what I'm saying. Walk back to that your insurer, tell them your situation. It's normal to fail. Ask for those options. And I'm 100% sure that there are options that can be explored in that you don't lose entirely your money if you've paid premiums, unless the type of policy you bought does dictate so. Because now the person did not give us the type of policy they have. But if it was an endowment and a life insurance house, 8 out of 10, you really shouldn't walk away with nothing. At least that can be a paid up policy. At least they can. There has to be discussion. There has to be a discussion, which I may not specifically direct now because I do not know which plan you took. But the answer is yes, there are alternatives that you can explore to be able to have an amicable solution to your problem. Thank you, Darius.
All right, thank you, Joseph. We are moving to the evening of our session. I have a question from the chat. This is from Charlene Chirabo, and she's asking, university students could be possible insurance clients, and majority of them would love to take on products. Unfortunately, the minimum premium is quite expensive for most of them who are not stable income earners. They shouldn't really be left out. So is it possible to get products that have a minimum less than 100,000 for students who are interested and can later upgrade when they have the capacity? If these products do exist, which insurance companies do provide them?
Is that mine?
Daisy?
Okay.
Okay. Joseph, basically, if I can summarize,
okay.
if I can summarize, this person is concerned that the premium is quite high, 100,000, and so it leaves out some potential clients like university students. Are there products that have less than 100,000 that someone could take on? So which companies would you recommend if they are there?
I'd like to answer that question from a financial literacy perspective,
Yes.
Darius.
Yes, please.
Now, by the time an insurer, you realize that in the economy, the minimum premiums are 100,000 for most life plans, and that is because this price has gone through actuarial processes that has evaluated the amount of risk that the insurance companies are taking on and have decisively agreed that 100,000 can comfortably enable insurance houses to take on those risks. Okay. Now, I do understand that there are universities that will want to take on insurance. Question is, what insurance do you want to take on? I'll give you an example. I'm sure they are lower priced. There could be lower priced policies, especially if they are maybe whole life and all that. But again, we need to know that from a financial perspective, if that person is working, if an university student is earning an income, let's be objective here. If they're earning an income, then we should be able to put that price of insurance into that person's financial, structure, and then be able to afford 100. If a student wants to take on a life insurance for the bare minimum of life insurance, then the question is there affordability? Because we also look at this being a contract that has obligations. So I'll give you an example. If the university student is not able to rent for obvious reasons, financial muscle, if they're not able to take on these other financial obligations, then they are also running a risk taking on a 10-year plan where they are going to be required to pay 100,000 and then halfway fail. So but in the market, there are products or services that would, or for example, that would enable these university students to take on a plan that is not purely endowment, that have a bit of investment. And for example, you could have a plan whereby you're paying 100,000, but in case your cash held up, maybe in 20 months or 25 months, you're able to come and draw from your savings. So that client, an university should be able to reach out to an insurer, do a research and find out from the various insurance houses products that give them flexibility later on. Why? Because we are establishing that probably they have not established a financial source. Remember, I said when I was starting this, that every human being is an economy. You have an inflow and outflow. Now, when you do not have a substantial inflow, that is where you start from. Where can you, before you take on these financial obligations, establish an inflow? That's when we need to appreciate it at a wider scope. Nonetheless, houses, especially Prudential, and there are other products in the market. They are purely financial products. There are products in financial services, unit trusts, and all that can benefit this client, this prospect, to take on a plan that won't put a burden on them, when they get financially constrained. And I think from a financial literacy advice perspective, that would be the best decision to do. And then when tomorrow they are able to stabilize their finances, walk into these other ventures that have a stringent requirement of financial obligation. That's what I would advise that client.
All right, that's fantastic, Joseph. So right now, I'd like to ask Daisy to give us her parting shots. We've had a lot of questions coming through. You read some of them on our WhatsApp community, and I thank you for your time that you've accorded us to be able to share with people about life insurance in detail. So if you have some parting shots, maybe one thing you feel the person on the call should know before they leave, you can kindly give it to us, and later Joseph will also come back to us and give us his parting shots. Daisy, over to you.
Okay, thank you so much, Darius. I would love to let us know, and this would come maybe in form of a question. My question would be, what do the rich do that we do not do? So in a way that there are things that rich people do, or those aspiring to that road are doing, which is saving them millions of money, which would have been lost in taxes, which would have been lost elsewhere in expenses and so on, that we are not close to follow through, maybe for lack of knowledge. But I would challenge us that let's look into those things, especially now that we are into this personal financial management class. We need to self-improve ourselves daily. And with this, especially if you're young, let's not close our minds to what we have heard people say out there. Just do yourself a service. Search for true information. Don't limit yourself. Don't block your brain. Learn and learn every day. Because most of the times when we think something is bad, when we have just heard people say without confirmation, we lose out. Then secondly is as in the perspective of financial literacy, I would love, someone had asked it actually as a question, why they do not take older people. In insurance, the risk is lower when you're younger. As you grow old, the life hiccups have hit you left and right, and therefore that's when the diseases come in and so on. So it becomes expensive. So if you want to make it count for you, if you're still young out there, don't wait until you clock 45 to join. Because if you join your first employment or you have your other streams of incomes coming in, you could give it a shot. However, also like what Joseph said, this is it's mandatory. There are things that you may, somebody had asked prior, that are there negotiables in insurance. In insurance, majorly you may not find many negotiables. It is what I have to offer you. You love it, you take it. You may not negotiate. So the best way to go about this is first confirm yourself. Somebody had also asked a question about trust, unit trust. How do they start? What is the best? Do they go for insurance policy? Now, unit trust, it's like you're earning money daily. Money is coming in. But remember, insurance money, you're taking out money to another source just to find it later. So you must have really consistent, credible source that you know, even if anything happened to you, you're still good to go. You will still find that money that you're comfortable with to save. So unit trust to start with, you can go with unit trust so that you're sure that money is coming in, and then you can use those other top-ups to drop somewhere else for the future use. So basically that is it. Thank you, Darius, for organizing this, and the members online. Thank you for making time up to add on your knowledge. All the best. Have a beautiful evening.
All right, thank you, Daisy. Over to you, Joseph.
Much, Darius. My parting shots are these. We are all here in this class seeking for ways of how we can make our future better by attaining financial freedom. Now, Daisy asked that what do the rich do that we don't do? And so I want to address that quite briefly. We all know from financial literature that the rich invest. Save, they earn, they invest it. And so you hear entrepreneur, I'm starting a business. That is entrepreneurship. Basically, you're buying and selling, probably. Or you're manufacturing, you have something you're selling. So all of us, like, we are an economy. You must have something you're selling. It's either a service or a product. There's no shortcut about it. These things, sometimes when we talk about it in these jargons, they sound so huge, but the concepts are simple. Is that as a person, is there something you're doing or selling? When you're doing this, you're either doing it short term, medium term, or long term. When you do that, can you sustain your life? And when you're sustaining your life, do you have in your production or what you're earning, are you able to save? Then when you save, under saving, that's when you look at short-term savings, medium-term, and long-term. We're looking at accumulation of money. And insurance pretty much falls in between investment and saving. So you save, that is money you're putting aside. When you've done that, can you invest? Investing is simply, you're getting a certain amount of money, you're putting it into a venture and allowing that money make money for you. So sometimes we confuse ourselves with all these concepts and we fail to get one that helps us as an economy. You gave an example of a university student. That is a very fully fledged economy. They have a source of income either from a parent or they are volunteering somewhere. There has to be earning. And when you earn, and that is a whole, when you earn, then what are you doing that money with? That is another thing. Are you spending it? Are you saving some of it? Are you investing some of it? And when you're doing that, are you doing it in short term? Are you doing it in medium term? Are you doing it in long term? If I was to have a discussion with anybody, that would be the foundation of your journey. Insurance, life insurance is good. It is a form of investment. Why? Because you get money, you put it there, it makes a bonus for you. It makes money for you. When you have a sum assured of 30 million for 10 years, and every year you're getting a bonus of 3, 4, 5% on your sum assured, it's money making money. It qualifies to be an investment to that end, depending on the plan you get. But because you're saving every month as well, you're accumulating your savings. So it goes to what term of policy do you have? Is it a 10-year policy? Is it a 5-year policy? And what do you have at the end that you want to use that money for? So you're looking at medium term, so short term, medium term, long term. Circles. Investment clubs, name it, all bonds, everything. There's a whole lot of options out there. My emphasis normally is, can we have a discussion on what works for you? Because what works for Joseph does not work for Daisy, and neither will it work for Darius. You need to find that particular mix that works for you. And the earlier you find it, the better. The risk that Daisy has talked about is that we wake up at 45 and we've been a jack of all trades and we still have nothing that we are building for ourselves. We wake up at 40 and 45, 50. I've seen people I've talked to and they say, I wish I knew this. And that's a very painful statement to get from a 50-year-old man.
Very true.
So if you're on this call, let's have a discussion around what works for you. And I would like to encourage, whether you're talking to Joseph as a life insurer, whether you're talking to Darius as a personal financial advisor, whether you're talking to Joseph as a unit trust seller, whether you're talking to someone who is selling bonds, whether you're talking to your banker, the main purpose is you as a person, you need to establish a framework that works for you. Because you know what? When you're done with that, you will hear that goat rearing makes money. You will hear that piggery makes money. Sorry for those that, against, you will hear that, oh, cryptocurrency makes money. Everything makes money. By the way, even sleeping may make money for you. Because you can sleep and meditate and craft a plan, and that plan can be a super plan. So let's get up, let's get real with ourselves. Let's not looking and hearing what other people are saying has worked for them. Let's set on a journey that works for you. And this would be a springboard for you. The best time is now, it's not tomorrow, because tomorrow could be 45 years, 55 years, when chances have reduced. As I conclude, someone was asking, I think in the chat, that medical insurance, is medical insurance part of life or not? Let me simplify it for you, whether it's medical or general or none of the above. The principle is simple, that it helps you restore you to your previous state before an illness comes. And so someone is asking, where is a simple one? There are very, very simple terms in medical. If you're a group of people, you will walk to an insurance company, Prudential, UAP, whatever, and they underwrite you as a pool. But also, there are others like Prudential that offer individual medical plans. So if you're Joseph, you want a medical card, you can come, we give you a premium, you pay, you have a medical card. Soon or later, we'll have a regional cover. If you're a person who travels, you stay in Kenya, your children stay in Kenya, you work here, we'll be able to do that. But before that is on, we still have a Ugandan bound plan that can give you a medical cover as an individual or as a group of people or as a company. So it's very important. Let's simplify life. Let's learn these things and simplify them. But it will be simpler because you understand yourself. It all goes back to, are you making money? Are you sustaining your life today? Are you saving some? Are you investing some? When you have those clearly stipulated, clearly streamlined, and you know what works for you, the journey of making money will be fun, because now the focus will be, this plan that I have, how do I maximize? These kiosks that I've opened as an entrepreneur, how do I maximize my profitability every month? Forget that person who has a diary next to you. Forget that person who's opened a salon. You've chosen a kiosk. How do you maximize? And then 10 years later, you have a track record that you can evaluate. So if you contacted me for financial advice, we have a track record that we can look at. We can look at where we are failing. These people who do financial advice like Darius, they have how they can help you. But if you keep on juggling between A, B, C, D to Z and going back, you will wake up and you have nothing that works for you. Darius, I'd like to stop there. Thank you very much for your time.
All right. Thank you, Joseph, for your words on insurance. And indeed, I would like to emphasize that as we come for these sessions on a weekly basis, let's continue to learn. When we move away from these sessions, go out and read more about insurance. Read more about that topic that we may have discussed and maybe you didn't get the full details. And most importantly, you must implement what you are learning. You can attend all the sessions, But as long as you're not implementing what you're learning from these sessions, your time is as good as wasted. Remember, if you always need a more detailed session, a one-on-one, you can engage me and we talk more. If you have a group that you'd like to interact with and you would like me to come and speak to you about financial literacy, I'm more than available to come and speak to you. Lastly, if you missed any of our previous sessions, please make sure that you go to my YouTube channel, which is Personal Finance with Darius. Hit the subscribe button and you'll be able to see the previous sessions as well as the future sessions. So for some of you asking about the links for the sessions, as long as you're part of this session, it means that you left your email behind. I'll be able to share with you the links for the future sessions via email. But also, we have a WhatsApp community where we discuss matters related to personal finance. So I had posted my number in the chat room. You can get in touch. Our numbers are a bit very high, and I'm just contemplating whether to create another WhatsApp group. So you can leave me with you can drop me a chat and I'll be able to add you onto our new group. But I thank you for having joined us today. I do hope that you go and implement what you've learned from here. Think about life insurance as part of your plans as you think about achieving financial independence. Again, it is very awful for you to get to 60 years of age and start saying, had I known, had I listened to the call that I was given out to me, or maybe something happens to you later and you can't make more money, and then you start saying, I wish I'd done something when I still had the capacity to do so. So please go and think about it. There are many companies out there. The good thing with me is that I'm not an insurance agent. So if you come to me, I'll help you to dissect the different companies based on how I've interacted with them. And then you'll go and be able to make a decision on your own. So if you're just torn in between which company to take on, I can help you to give you an analysis of the companies based on how I've worked with them. And then you can take a personal decision. But most importantly, you must implement what you are learning. Please stop sitting on that bicycle. You must move. You must take action so that your finances will get better with time. That's it that we had on our session today. I wish you a great week ahead and see you on Sunday. Thank you very much.
Thank you, Darius. And thanks to everybody.
Thank you.